Hello everybody, welcome to Quintessential TV. My name is Michael Quinn. I'm one of the directors of the Quinn Group, and this month we'll be talking about payroll tax audits. Just wanted to let you know that there has been an increasing number of audits being undertaken by the Office of State Revenue. They're obviously on a revenue maximising campaign with existing businesses. So you need to be aware that a lot of this activity is around. The ATO are now sharing their information through upgrade of their computers. They've spent over $500 million on upgrading their computers over the past 2 years. And they're sharing that information with the Office of State Revenue, ASIC and WorkCover. So from that information they will decide what particular companies, businesses, whether they be trusts, partnerships, sole traders, they want to audit from a payroll tax perspective. Last year there were over 3,000 payroll tax audits that were conducted. The two main areas that are being reviewed by the OSR are in the area of grouping and contractors. Let's take a look first at what we mean by grouping. The OSR argue that companies should be grouped if they are first and foremost related entities under the Corporations Act. Related entities, as an example, are commonly a holding company and subsidiary companies. They would be classified as related entities. Also, commonly controlled businesses are classified as a group, and commonly controlled businesses can be defined as where you have a controlling shareholder or shareholders, a controlling director or directors, common employees, shared facilities and systems. In other words, you have a number of businesses operating out of the one location and utilising the same computer systems, and where you have intercompany loans in accounts. So it looks, for all intents and purposes, from the financial statements that the businesses are commonly controlled. What does this mean? What is the problem with grouping? The problem with grouping is the fact that you only obtain one threshold, one payroll tax threshold for the whole of the group. So in other words, if you have two separate companies that are considered separate businesses, each company has currently a $750,000 threshold, which means you don't pay payroll tax if your wages, superannuation and contractor payments are less than $750,000 per annum. Once you go above that threshold, $750,000, you pay payroll tax at 5.45% on the amount above $750,000. So $1 million wage, superannuation and contractor bill would mean you pay payroll tax at 5.45% of $250,000. The problem with grouping is that if the OSR align a group of your companies as a group for payroll tax purposes, then you only get the benefit of the one threshold, the one $750,000 threshold. So that if your total wages, superannuation and contractors are $3 million, you pay payroll tax at the rate of 5.45% on $2.25 million. The second point, or the second matter that the Office of State Revenue is looking at is whether businesses are including contractors in their calculation for payroll tax purposes. Now, the situation is that the legislation prescribes that contractors are to be included in the calculation unless they meet one of the 9 exemptions under the payroll tax legislation. So oftentimes businesses will include in their calculation of payroll tax their gross wages and their superannuation, but forget to include contractor payments, thinking that contractor payments are exempt. Contractor payments are not exempt from the payment of payroll tax. So then, in summary, it's vital that if you receive a payroll tax questionnaire alluding to a payroll tax audit, you should get in touch with us to get proper advice as to how you complete that questionnaire, or advice as to strategy in relation to attending to a payroll tax audit. I hope that this has been beneficial to you for this month. If you have any questions or queries, by all means contact us either by phone, email, fax. We'd love to have your feedback, so please like, comment or subscribe to this channel. That's all for this month. I'm Michael Quinn. Bye for now.